Hello, everyone. Welcome to another installment of Silver's Educational Hub. My name is Fizza Khan, founder and CEO of Silver Regulatory Associates. I am thrilled to be joined by my friend and industry colleague, Duke Kim from Securitize. Duke, welcome.
Thank you so much for having me this morning, Fizza. It's a super pleasure and very honored to be thought of as someone I could hold a candle to you in terms of content and discussion of the tokenized world.
Well, we saw each other at Cayman Crypto Week, and that is what spawned this discussion. We're now here in Miami, and we're hoping to get some thoughts from you about what you're seeing in the space, what you're doing at Securitize to kind of be at the cornerstone of both tokenization and capital markets. So why don't we start off with describing a little bit of what you do, and then we can segue into what you specifically are seeing in this world of the buzzword,
Sure.
Tokenization.
Tokenization is the narrative, it's the theme, but more importantly, it is the plumbing for on-chain capital markets, which will very soon just be capital markets.
Exactly.
So by introduction, I drive fund administration sales as well as tokenization conversations inside of Securitize. Securitize, founded in 2017, we are the leading RWA tokenization platform, specifically focused on securities. We tokenize securities, we tokenize private fund shares, public equity as well. We're best known for having worked with BlackRock, Apollo, KKR, Hamilton Lane, and a handful of other large asset manager icons in the industry.
Fantastic. So you started off with saying tokenization, tokenization, tokenization. And it's timely because the SEC released a joint statement among the different divisions clarifying today that tokenization of securities, like you said, is securities. They're treated as securities. We can't think of them in any other way. I think it's timely for our discussion. So what are you seeing by way of trends around tokenization?
Sure. So obviously there's a lot of interest, there's a lot of conversation with managers trying to understand A, what it is,
Yep.
B, how it helps them,
Right.
and see if they should do it.
Exactly.
So if we start at the super high level, you said the magic words, right? Our business has been taking traditional securities, making a digital asset security. Same rules that Fizza and the team know very, very well about how to make sure that thing stays compliant,
Yes.
applies to the token.
Amazing.
The goal for us, though, the reason why some investors opt to buy the tokenized version of a fund versus the traditional, what I'll call paper version of that fund, is the DeFi use case. Can I do more with my money to make more money?
Okay.
So very often for investors, there's a concept right now in DeFi called looping, which is really levering on your investments. So you can have a private credit product as purchased from Securitize and a handful of other competitors, and you can on-chain borrow against that in stable coins and reinvest that proceeds back into additional product. So you create levered opportunities, which exists in the traditional world.
Yes.
It's just a little faster and a little bit less frictionful in an on-chain environment.
So what are you seeing by way of the manager interest in doing something like this versus the investor adaptation and adoption of tokenization?
Phenomenal question. And so I will say that I'm often known internally and externally as the anti-tokenization sales guy. Because for us, it's really been about working with the right managers to bring the right products on chain.
Okay.
So when you think about the interest from the manager's perspective, regardless of what that manager is, strategy is, investment, their track record, they want to tokenize. Because I think for a lot of them, they see tokenization because it's such a big buzzword, it's such a big narrative right now, they think that tokenization is a distribution mechanism. It's a way for capital formation that can exceed whatever their AUM goals have been so far, whatever their struggles have been around getting attention for their strategy.
Right.
They think tokenization solves those problems.
But it doesn't.
And we would argue flatly that it does not solve that problem. If
Okay.
your strategy can't get traction and no one wants to invest in your product in a paper world or a traditional world,
True.
very similar situation in a tokenized format.
Okay.
So for us, it's really been working with the greatest we'll call it traditional asset managers, household asset manager names, and then also working with really, really intrepid digital asset focused funds, still running great strategies, great history, have capital behind them already to bring those products on chain as well. And so I think those are the more interesting things and the more fun things to talk about. But it's almost a barbell. So it's a BlackRock on one end,
right,
and then undisclosed DeFi native hedge fund that has a great product, interesting potential functionality with that tokenized asset on chain, again, through some sort of leverage opportunity or additional liquidity. We're bringing both of those types of products and those types of managers on chain today.
You've said so much in that one statement, and I think for the benefit of our audience and for the benefit of those who are completely new to the concept of tokenization, on chain, even just crypto generally, let's talk about this in plain English.
Sure.
If we were speaking to either one of our grandmothers, walk them through what is tokenization and what is how should we be thinking about tokenization with respect to investments?
Great question. So if we take a pause back there and I speak to my grandmother or your grandmother about this, it's the simple act of taking something and making a representation in a blockchain, in a digital ledger, right? So again, what I consider, I'm old enough to have actually worked with corporate bond traders that had paper securities,
right,
that would go to a redemption window and say,
right,
I own this par security and I'm owed 50 cents of interest, and you do that. That's the paper world.
Right.
The on-chain world, the tokenized world, it's simply, hey, it's a digital representation. Just as the rest of the world is moving digital, we're also moving to blockchains. So it is a digital representation on a blockchain. We take, and that can really be anything, right? So we always say when we talk to people maybe more our parents' age, if we can remove our grandparents out of the conversation for a second.
That's fair.
It really becomes, tokenizing sounds scary, we're talking about blockchains and digital ledgers. That's the easiest part of the consideration. I always joke, you and I and an iPhone, we can tokenize a thing together just via Google and ChatGPT. That's the easy thing. The hard thing is building a digital asset security. The hard thing is making sure that it maintains all the same compliance, all the same rules and regulations that would apply in the paper asset, the traditional asset, for the digital version of that asset. There are a couple of variations on a theme and sort of real differences in how people think about tokenization and whether or not it's a wrapper product or at the worst case a receipt, something like an ADR,
right,
versus again for platforms like Securitize, really thinking about the thing of value is the thing that's actually in your digital wallet. So it's not a claim to get a claim, it is the actual security on chain.
Understood. And thank you for that explanation. I think for my benefit, at what point in the conversation that you're having with your clients do regulatory considerations come up? Because we at Silver are managing what we call this gray area, right? We now know that tokenized securities are securities. We apply the securities laws. Managers that are dealing in securities and getting a fee on those securities, whether they're tokenized or TradFi, they are going to be subject to the Advisors Act. But I am curious to know, because it must come up in conversations with you and your team, and then ultimately your clients, when do you start incorporating the regulatory aspect of this, and when do you become concerned?
Phenomenal questions. So that's a day one, that's a step zero conversation. Because again, some managers, again, typically more, we'll call them emerging managers, maybe very much focused on crypto and digital assets versus a traditional manager that understands regulatory rules, securities compliance, things of that nature. They come to us saying, hey, we want to tokenize a thing, and we want to get it listed on Coinbase, get it listed on Uniswap. So we have managers coming out to us and saying, hey, we want to tokenize our fund shares, and we want to get it listed on Coinbase. We want to get it listed on a decentralized exchange, a blockchain-based exchange. And we tell them no, because we're going to end up, if you work with someone like us, at the end of the process, you end up with a digital asset security.
Right.
Same rules apply. And again, I will pound the table as hard as I can about this. There is no difference. We can remove the crazy blockchain discussion, the digital discussion. It's just another form to have that product into investor hands.
Okay.
So it's really a day one consideration and conversation for managers to understand the thing that we create for them is a security, period.
Okay.
Once they get through that, then the rest of the conversation is simple.
Okay.
And we have done our part at Securitize to enable full-blown compliance because we create digital asset securities that follow the same rules, all the same regulations that would apply to that manager based on jurisdiction, exemptions, things of that nature. Same thing applies in this world. Inside of Securitize, we've got a registered broker-dealer, a registered ATS, SEC registered transfer agent, and digital transfer agent. So there are some technical pieces to it, but we are fully compliant for a manager to go on chain. But the important part here is we're fully compliant for a manager.
Correct. And that's really good to know that your clients, our clients can have that very level of comfort, I should say.
Exactly.
That high level of comfort. You are looking out in all aspects of this process. I want to shift gears a little bit in terms of the regulatory piece. You said, I'm going to say custody over tokenization. How are you at Securitize managing the custody aspect of this? Because as our audience and our clients know, Silver has been very much at the forefront of managing this particular aspect of educating the regulators about custody.
Right.
Can you educate our audience about what you're doing with custody?
Sure. At a high level, we are non-custodial, right? We're simply a tech platform, an infrastructure platform for managers. But the custody conversation comes up.
Yeah.
Because again, there are, if I've spent the first part of our conversation saying, hey, there's no difference from the security to the digital asset security.
Right.
There are parts of the workflow that start unraveling that a little bit here. So
Correct.
Custody does come up often. So from our perspective, again, when our transfer agent issues tokens into an investor's wallet, it's the investor actually being self-custodied or working with a qualified custodian or a trust type entity to hold those assets for them.
Okay.
That sits outside of what we've actually generally created, but just because this part is a little murkier in a digital asset environment versus a traditional or paper environment, we do work more closely to make sure, we work closely with partners like Silver to make sure that our clients feel comfortable, their investors feel comfortable, the advisors feel comfortable, that it all works and it works at scale.
Excellent. So one of the things that I picked up from your conversation in Cayman is, and something you alluded to here, is the viability of the tokenization process. What exactly is the manager trying to get out of that process? And one of the things that you mentioned today, and even in Cayman, was the distribution, and they're hoping to get a broader distribution. Do you think that is the right way of thinking about tokenization, or do you think that they're trying to put a square peg into a round hole in it, trying to achieve something that they normally would not have achieved anyway?
Great question, and this goes back to trying not to sell tokenization all the time.
Right.
It is really about disabusing, again, managers that are exploring this, and we're always happy to have that conversation, but really explaining to them that this isn't the panacea that most people think about it is.
Okay.
So they think, just like the NFT boom a few years ago. So very active in the space. And I remember friends saying, oh, Duke, you're very involved in NFTs. I have all these pictures on my phone. If I make NFT, which are tokens, right?
Yeah.
If I tokenize the pictures on my phone, can't I sell them and make money too? And I tell them, you're not Ansel Adams. You are. If no one wanted to buy your pictures off of Etsy, they're not going to want to buy your picture off of an NFT platform.
Correct.
The same thing when you talk about tokenized assets and these structures that we're bringing to market is it attractive on chain? Is there a reason for it? I think platforms like ours sit in a very unique intersection of really matching supply and demand.
Yeah.
Working with the best managers, bringing a product that the demand side, right, the DeFi community, the on-chain investors, what are they looking for? Okay. Generally speaking right now, they're looking for incredible liquidity, so daily liquid products, intraday liquid products, as well as then higher yield, which is
Okay.
what everyone wants,
Of
but
course.
specifically in the world of DeFi.
Yes.
So think about the products that we have brought to market, or the products broadly that are in market now. Money market funds, AAA CLO product, those are very low risk, very low duration products. That is the very kind of beginning of the engine for decentralized finance. High quality underlying asset, has some yield component to it with liquidity for investors. That's been the backbone for how we've built tokenization. Now we get into more fun things. We start extending out risk, extending out duration, bringing higher yielding products because of the risk extensions necessarily, bringing those on chain. And then we go back out to our manager community,
Okay.
both we'll call them very traditional, also very crypto native or digital asset native asset managers saying, hey, there's a market demand here. Do you have a product that may fit those requirements? Let's bring that on chain. What doesn't necessarily work is the manager coming to me saying, I've got an untested strategy. I can't find capital.
Yeah.
I think this is the way that I'm going to raise money.
Yeah.
And if that's your concern and that's your problem, I would say come to iConnections, right? It's a traditional
Yes.
shoe leather on the ground, meet people, talk to them. That's how you distribute products.
Right.
That's the same thing for even our distribution teams and the other platforms that are like this. It's the same, that same consideration, that same challenge exists. Tokenization doesn't solve that problem.
Amazing. I'm so glad that you were able to clarify these points, because I think there was a level of confusion on the distribution end of this and what is meant to be accomplished by the manager. This clarifies that beautifully. One last question in terms of distribution, but from the LP side of things and the investor side, what are you seeing in terms of interest? What are you seeing in terms of education in getting people who are allocators, who are LPs, to take notice of tokenization? Because at the top of our conversation, you mentioned that this is going to be it. Like, this is the way that distribution is going to happen. So tell us what you're seeing on that side of the world.
Sure. So we talk about this a lot internally about where the investors are, right? Managers will come to us and say, you guys do these for big names. Can I get in on the action? How does that part work?
Right.
And we will say, why does an investor, if they need money market access and that exposure, that risk, that's what they need to buy, why don't they just call up their broker and say, hey, give me a money market fund? The reason the on-chain version of those types of products exist is some additional yields generation opportunity, borrowing and lending on-chain, or additional use cases like settlement and things of that nature. And there's also Saturday liquidity, intraday liquidity.
Wow.
So there are neat functions as well as, again, more revenue generating, yield generating opportunities with tokenized product versus traditional. The LPs do have to then get comfortable though with the custody question.
Exactly.
How they actually get comfortable from a policy and procedure perspective of self-custodying in a crypto wallet. Do they want to do the DeFi things with that asset to make more money?
Correct.
If they don't have an intraday liquidity need, if they don't have the wherewithal to do things with their assets, these products are not necessarily for them just yet, because there are still some other friction points, operational friction points that do need to get further resolved, ironed out, and smoothed out for true institutional adoption. Large base of products like ours, the buyers of products like ours in the marketplace have been on-chain investors, DAOs, foundations, crypto native hedge funds. We are having the conversations with larger allocators that want to get into these products, but there's still quite a bit of education that needs to get done.
Of course.
Regulatory certainly coming down in the US as well as Cayman, very, very helpful for these things though.
Absolutely. And what we're seeing by way of the regulatory side of things is exactly what you've described. We want to educate both the manager and the LPs and the allocators to understand that we are taking this very seriously. Members of the Securitize team, members of the Silver team want to be able to answer all of your questions and get you comfortable with the tokenization process. Final words. Give me 3 things we should take away from this conversation for our audience.
Number 1, Fizza and the Silver team are way smarter than I will ever be, beyond compliance. More importantly, though, I think that tokenization we're tired of justifying it. If I may be blunt at the end of this conversation,
Absolutely.
it is it is truly becoming or has become part of the capital markets infrastructure.
Yeah.
We are seeing the efficiencies that people have promised for years. The Carlos and the founding team at Securitize have been pounding the proverbial table about the cost efficiency, the liquidity profiles. We are seeing those things play out in real time. We're working with the best managers. The best managers are coming on chain today, or they're already here.
Correct.
So this isn't a far out consideration. It's let's talk to folks that understand rules and regs. Let's talk to people that understand the technical infrastructure. Let's have those conversations today.
Absolutely. Duke, I can't thank you enough for joining us today, educating our audience, putting a smile on our face. It's wonderful to see you. Where can they find you if the Silver team, or members of our audience have any questions about what we've talked about today, or even about what Securitize has to offer?
Sure. So the company is Securitize. Securitize.io is our website. You can find me on LinkedIn, as well as I still call it Twitter, at the Duke Kim. And you're always happy to email me, duke.kim@securitize.io.
It's been such a pleasure. Thank you so much for your time. And thank you for joining us today. We look forward to hearing any comments or suggestions you have about the Educational Hub video series. And we'd love to hear your feedback about our conversation on tokenization. Feel free to reach us at info@silverreg.com. Thank you so much.
Thank you.